This is the Chapter 6 practice exercise number 2. And in this case, we are creating a statement of owner's equity using a different partial worksheet than we did in number 1 for a different company, Major Advising. Okay, so on this one, we start with the owner's capital at the beginning of the fiscal period, which we will find right here on this line, so 4,077. Then we take the net income for January, which is $22.35, and we subtract the withdrawals from it for January, so minus the withdrawals, or the drawing in this case, $8.59. Then I'm going to use my spreadsheet to subtract that, so 22.35 and 8.59 equals 22.35 minus the 8.59, and that's 13.76. And it is an increase in our capital because our income was more than our drawing. If the drawing is ever more than your income, then you've got a decrease. And because it's an increase, I'm now going to add that 1376 to 4077, and that's 5453. And check your work. And it's accurate, so you can move on to number 3. This video is for practice problem 3 on chapter 6. And on this one, what I'm going to do is I'm going to use half my screen here and put this one on this half so that I can see both at the same time. Okay, so we're doing a balance sheet that shows our net worth on a specific date. So we first list our current assets. Those are the assets that we find at the beginning of a balance sheet. So we'll start with cash, as they're listed over here, and it's $13.44. The next one is supplies. Or accounts receivable, I'm sorry. And it is $926. And then the next one is supplies, and it's $355. And the last one for current assets is prepaid insurance. For $875. Okay, then I would total those. So I'm going to pull my spreadsheet up here. And it's $3,500. Just going to check my amounts real quick, make sure I input them right. So $3,500 for current assets. Okay, then we have one piece of equipment that we need to include, and that is office equipment. So those come under separate, that are under property, plant, and equipment. So we go to our office equipment, and it was $3,420, and keep in mind this amount always reflects the original value, what we paid for that equipment. Then underneath it is a contra account that's there to shows the accumulated depreciation, and it is an opposite account of equipment, so it subtracts from it. So 214, and then I need to subtract that. And it's 3206. And then I need to add the two assets, $3,500 and the 3206. So equals 3,500 plus the 3206, and that's all of my assets together. 6706. Okay? Okay, then I go down here to my liabilities. And my liabilities are two: accounts payable and wages payable. So I start with accounts payable, and that amount is 1,031. And then I go to wages payable, and that amount is 288. And I need to add those. That's my current liabilities. So 1,031 plus the 288 for a total of 1,319. Okay, then I go down here and I want to put in my capital account. I do have to do some calculating for this one. So, for instance, my capital has started out with 4,035. And the things that have affected it this month are my net income and also the drawing. So I need to subtract the 928 in drawing, and I need to add my net income of 2280. So equals 4,035 minus the drawing, and then add the net income for a new balance capital of 5387. Very important that you remember to recalculate that and show the effects of what's occurred in the business this month, because otherwise it will not balance out. So then we need to add our liabilities and capital. Equals 1319 plus the 5387 gives us 6706, which should be the same as our assets. So now our accounting equation is back intact. Assets equals the liabilities plus the capital. So they're both, the left side 6706 and the right side is 6706. And then I would check my work. And it's accurate, and so I move on to the next assignment.